I am Marie Brown, and this is Minds in Motion. So, since we've been talking about paying ourselves first, saving money, of course, to invest, and having multiple bank accounts at multiple banks, I want to talk about something that most of us don't think about, but I'm sure that we are aware of, and that is how banks make money. So, the first way that a bank makes money, and the most common way, is a customer like you or myself. We go into a bank and we open an account, either a checking account, a money market account, a savings account, a CD, or maybe even some type of investment account. The banks lend our money to others for loans, and those people that get loans from the bank, they pay the loans back and interest, and the banks make money on that interest, and they either pay us barely any interest on the money that they're loaning out that belongs to us, or some banks don't pay any interest back at all, depending on what type of account you have. Now, other ways that banks make money are through investing in government and rated securities. They also earn interest and dividends on those type of accounts, whether it be through investing or giving out loans. They also earn money by charging us, the consumer or customer, overdraft fees and insufficient fund fees. Also, when we open up an account, such as a checking account, sometimes there's fees involved if you don't keep a minimum amount of money in that account. There's also annual fees on credit cards, ATM fees when you're not using the bank's ATM. Sometimes they charge you a convenient fee to use other ATMs. And then you're also paying a fee to use that ATM in addition to the bank charging you a fee for not using one of their ATMs. There's also interest rates on credit cards. If you look at the back of your credit card, it'll say issued by Bank of blah blah blah. So some of those cards charge annual fees. If you're not paying your balance in full each month, you're paying interest on that money. And also, if you're ever late paying your credit cards, then you're going to pay a late fee of around $35, which is about how much you're going to pay if you have an overdraft, which is also anywhere from $30 to $35. So, these are all ways that banks are making money from their customers. Now, as we said in previous videos, we have to have bank accounts, but saving your money in a bank is not going to make you wealthy. It's not going to help you acquire financial freedom. It's not going to help you reach that goal of becoming a millionaire. So, does that mean that we're not going to put our money in banks? No, that's not what that means. It means that we're going to be smart with the money that we put in banks. So, for a second, let's just think about it. What do the wealthy do with their money? Well, of course, they use banks as well, but they only use banks to house money that they're going to be putting towards a goal, money that they're not going to be investing because they may need to use it in the very near future. One thing that we want to make sure that we have in a high interest savings account is our emergency fund. And remember, your emergency fund, if you don't have one, start out with $1,000, and then after you have $1,000 built up, then you want to try to work towards having 3 to 6 months of finances in a high interest savings account as an emergency fund, which is liquid. It's available to you in case of emergency. I suggest looking for some online banks that offer an interest of 2% or higher. Now, also, the wealthy, they invest their money in stocks, bonds, government bonds, international funds, or they start a business, or they invest money in their already existing business. The only thing that we want to have our money in the bank for, again, is like I said, for an emergency fund. Do not, I repeat, do not have large sums of money just sitting in the bank, because those banks are using your money to loan to others. They're making money off of your money, and you're not getting anything in return. Learn to invest. Start doing your research, start reading, start doing whatever it is that you need to do to learn how to put your money to work to gain compound interest and get a return for your money, because your money sitting in the bank is not benefiting you unless it's there for an emergency fund, but anything over that, it's just making the bank's money. You guys have an awesome day.